Good morning, Dr. Gary here. On the road, we are dental practice brokers nationwide. And today's topic is what happens when the tax return doesn't reflect what the seller stated the gross income of the practice is. This is a problem. We're going to get into what happened this time. So we've been doing this for 12 years now, and I was a dentist for 25. We have 10 employees, including 2 CPA accountants, and we are growing. We're in 27 states now. You can reach us from 7:30 a.m. East Coast time to 9:30 p.m. So give us a call if you need advice or whatever. We're here to help you, buyer or seller. We work 363 days a year. We take off Christmas and Easter. So we pick up the phone virtually every day. Now, if you are a seller thinking about selling to a large DSO, you have a practice that's grossing 900 or more, 5 operatories or more, 4 operatories or more, please give us a call, because majority of all DSOs will pay our fee. We'll pay our commission. There's no commission to you. And some of the DSOs will actually reimburse for your legal fees at closing. So please give us a ring. Our number is 201-663-0935. And you can reach us at dentalpracticeguide.com or nationwidedentalpracticebroker.com. We're here to help you. The information you're about to hear is for entertainment purposes. It is not legal or business advice. So please give us a ring and we'll help you out, and let's see what we can do. So anyway, what happened now? The seller tells us the practice was grossing X dollars. And it was around that October time. He hadn't done his tax returns yet. And 2020 isn't really reflective of a good year. So we're waiting for the 2021. We provided a letter of intent based on his statement that he was grossing X number of dollars. Now, a letter of intent was given, and of course a letter of intent is non-binding. So, it's not critical. But all of a sudden, after the letter of intent, and we started the due diligence, his tax returns did not match what his stated income was. So, obviously we have a problem here. And we're trying to resolve it now. We haven't had this issue in the past, but we have it now. So we got the tax returns, and it was about $88,000 difference of what he said he was grossing and what the tax return stated. So this is a big problem. Now, the reason the letter of intent was given, because the buyers are anxious to get it done. They assumed he was telling us the truth, and I did too. And the letter of intent is non-binding. So with all of that, it's you take the chance. And that's essentially what we did. So one thing leads to another, and we get all the information in, and bingo, there's this big discrepancy. So we asked the seller, well, what happened? Can you give us an explanation of this? And he said, well, what happened was I have 2 practices, and some of the specialty work that I have goes to my second practice. I treat the patients there. That's why you have this discrepancy. And it's not really a problem. I just didn't want to come to my primary office. I only wanted to treat everybody at my secondary office. And that's why you have a big difference here. We're like, well, wait a minute now, what are the tax returns? He says, well, I use the tax returns of the secondary office for that. And we said, but that's a problem, because the bank only wants to utilize the tax returns of the primary office. So, we're going to have to deal with this. So what we're getting now is a profit and loss for year 22 from his accountant that will accurately reflect all the treatment that was done, that supposedly was done at the other office, and of course, what about the expenses and so forth? We've got to figure that out. So the bank is going to try to work with year 22 and get a new profit and loss that's signed by his accountant that will show that the income in year 22 is truly what the stated income that the doctor said. And I think we're going to be okay, but it creates a lot of suspicion for the buyer. Fortunately, the buyer is anxious to get this practice. It's a good opportunity. It has great equipment, etc. So we're going to see what we could do. But this is very difficult. You can't state one thing and have another on the tax return and then tell somebody, well, don't worry about it. This is really what happened. Tax returns are your bottom line. If it's not on the tax return, many people look at it as though it doesn't exist. But since the buyers really want the practice, and the bank is going to try to work together with them and will work with their accountant to prove that those patients that were seen at the other office are not seen at the other office routinely, that it's a specialty procedure, that the doctor who has two offices simply doesn't want to go to the primary office and perform the procedures there because he has his setup and so forth at the secondary office. I know it's confusing. I rarely come across this, but I do occasionally. Now it's 12 years I'm doing this. The number of times I had this, we had a 20% difference between what the buyer stated, the seller stated, what the practice is, and what the tax returns state. It's a huge difference. So every deal is different, and you've got to be ready. Fortunately, we have great dental attorneys, great dental banks. We're all working together to try to put this deal together. We legitimately feel he's telling the truth, but we have to document it and prove it. So that's what we're up to now, and it's challenging. But we're here to do this. We're used to chaos. I know many of you sold practices before and think you can do it with a boilerplate contract, and they've done 5, 6. I've done over 150, and I'm still learning. It's always different. So this is what we're up against. We thought we'd share that with you today. We have a bunch of new information coming out soon, plus new practices. Northern Virginia is on fire. We've got 5 practices there, so we'll share that with you. Thank you for listening. Bye now.